A conventional mortgage refers to a loan that is not insured or guaranteed by the federal government. A conventional or conforming mortgage adheres to the guidelines set by Fannie Mae and Freddie Mac, who offer both fixed and adjustable rates. Conventional loans are the most attractive loans for people with high credit scores, favorable incomes, and more money saved for a down payment.
Let's look at the pros and the cons. We'll look at the pros first. With a conventional loan, you can purchase and refinance an owner-occupied, second home, or investment property. You can also purchase and refinance up to 4 units, a single-family residence, a condo, a townhouse, manufactured home, and co-ops, which can vary by the lender. Private mortgage insurance is not required with 20% or more down payment, and there is only an annual private mortgage insurance that is paid monthly. It's a single insured loan with no upfront mortgage insurance. Private mortgage insurance can also be dropped after 2 years and 25% equity in the first 2 to 5 years. I cover the other rules in the mortgage insurance video. Escrowed property taxes and hazard insurance are not required with a 10% or more down payment, and the appraisal seldom requires repairs. Now let's cover the cons. Interest rates are calculated on a sliding scale using credit scores, the down payment, property use, and property type. The credit scores, however, significantly impact the interest rate that's offered. There are max loan amounts, those are national loan amounts. And if you're purchasing a second home or investment property, you'll be limited to the total number of financed properties you can have. Over 6 require significant cash reserves. There's a 4-year waiting period after a Chapter 7 or 11 bankruptcy discharge, a deed in lieu of foreclosure, a short sale, or charge-off. There's a 2-year waiting period after a Chapter 13 bankruptcy discharge, or a 4-year wait after a Chapter 13 dismissal date. There also is a 7-year wait after a foreclosure. The max loan amounts are based on the number of units. A single-family residence, a condo, townhouse, and manufactured home are all considered 1 unit. There is a high balance conventional loan that's offered in high-cost counties, but modified rules and slightly higher interest rates apply. Check out our website in the resources section under conventional links for the state and county loan limits. Conventional loans offer fixed rate loans for various amortized terms ranging from 10 to 30 years. A 15-year loan will have higher payments but lower interest rates. Longer terms have lower payments, but you'll pay more in interest with a higher rate. Adjustable rate mortgages are amortized over 30 years, and they offer a 3-1, a 5-1, a 7-1, or a 10-1 ARM. The standard conventional rules for purchasing a principal residence allow as little as 3 or 5% down payment for 1 unit. 2 units require a minimum of 15% down, and 3 to 4 units require 25% down payment. Second homes allow a minimum down payment of 10%, but only 1 unit properties are allowed. When purchasing an investment property, the minimum of 15% down payment is required when purchasing a 1 unit property, and 25% down when purchasing 2 to 4 units. 25% down on a 1 unit residence will offer the best interest rate, and the rate will be much higher with only 15% down plus mortgage insurance. The 3% down payment HomeReady mortgage is only for people purchasing a 1 unit principal residence, and it competes with the FHA and USDA loans. It also allows multiple units to be purchased when the main unit will be occupied as a principal residence, but a larger down payment is required. A manufactured home can be purchased with as little as 5% down payment on a principal residence. Second home financing is offered for 1 unit, and a minimum of 10% down payment. If you're looking to purchase a home that needs major repairs, the HomeStyle renovation loan could make it possible. It works like a mini construction loan. You'll need to hire a general contractor who can provide the lender's underwriter with a cost breakdown and description of materials for the needed repairs. The appraiser will use the cost breakdown and description of materials to appraise the property, including the improvements. The percent needed for the down payment is calculated using the appraisal, not the purchase price. These loans will take 60 to 90 days to complete the underwriting process, so plan accordingly. When purchasing a one-unit principal residence, a 5% minimum down payment is needed, 10% for a second home, and 15% for an investment property.
And that covers conventional mortgages.
Thank you for watching, and here's how you can help us. First, share us with your network on Facebook, Instagram, Twitter, and YouTube. Secondly, tell your family, friends, and coworkers about us. And lastly, we are publicly funded and need your help keeping our videos free by clicking on the Support tab today. Don't miss the tips and timing video, found only on our website, for all the ways that you can save hundreds of dollars when buying a home.